Hi, everybody, and welcome back to TradeStation for today's midday event. We want to welcome to our TradeStation webinar series Troy Epperson. He is, going to answer a question for us. What separates many retail traders from their more successful institutional counterparts? According to Troy, often it's the ability to read order flow sequencing, and that is trading with the trend and not against it. He's the lead trader at Ninja Order Flow Trader, or NOFT, and today he's going to demonstrate how to use Level 2 data and NOFT's proprietary institutional edge system to step up your game in any futures market. Remember that everything we talk about here at TradeStation during our webinars is for educational purposes only. All the symbols, all the trading ideas, and everything we discuss are for demonstration purposes. They're not recommendations. Our presentation is not an offer or a solicitation of any kind, any place where a TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Remember that active trading is not suitable for everyone. And options trading, although this presentation is not strictly on options, carries a high degree of risk and may not be suitable for all traders. I've included in the chat panel, you may have to scroll back to see them, 2 pieces of important disclosure information in PDF handout formats that I urge you to take a look at your convenience. This is regarding the characteristics and the risks of standardized options and the other asset classes that we cover here at TradeStation. With that short introduction out of the way, I want to bring over Troy Epperson of NOFTtraders.com to discuss with us how to gain a real-time tracking edge with order flow sequence tracking intelligence. Thanks very much, Troy, for spending time with us today here at TradeStation.
Thank you very much, Don. I really appreciate that intro and this opportunity to talk to the TradeStation folks. First, before we get started, I want to make sure everybody can hear and can see my mouse and can see my title page here. If you just put a yes in the questions box or in the comment box or chat box. I'm not super familiar with Webinator, so you'll have to bear with me. But all right, awesome. Thank you very much. Now, first of all, I have to give you a little disclaimer here right off the bat. I'm not going to sell you anything, and you're not going to get a link to buy anything. We're going to be talking about order flow sequencing and how it works. We're going to show you a couple of screenshots from our product, and we're going to ask you if you are interested to go and see a demo. Meet with one of our traders who uses it every day and ask them questions and show them demo. And I actually recommend that you sign up for a demo during regular market hours so that you can actually see it in action. Okay, not seeing any mouse. Okay, let me see. Can you see that right there? Okay, so you're able to see. All right, okay. All right, well, that's good. That's good. All right, because I got to warn you ahead of time, I only have 3 slides. All right, most people are going to be like, what? You only have 3 slides? Yeah, but I'll draw on them and then start over again, draw on them some more. We're just going to have a great time talking about order flow, okay? First of all, my background, I'm a trader. I was actually telling Don that I was actually a TradeStation user back in the 90s. Before TradeStation was a brokerage firm. And they used to have these TradeStation user group meetings. They had an annual users, and these were like in Las Vegas and Orlando. I went to 2 back in the day. I went to Orlando, and there was one in Vegas. And I'm talking about 3,000, 4,000, 5,000 people that were hardcore TradeStation users. So that was back in the day. They haven't done events like that since they became a broker. But that being said, so I'm an old school TradeStation guy, so I'm totally up for moving into the TradeStation space. NOFT has been a Ninja Trader house for a while, but we have adapted our products for TradeStation. You're going to get to see some of those screenshots. So All cool. So let's go. Let me see if I can figure out. There we go. All right. So here's the link. I'm going to tell you the link right here. NOFT-traders.com/book-demo. That's the link. Okay. And that's, I'll show this at the very end, but that's it. That's the hard sell. Okay. So from here on, we're going to be talking about order flow. Feel free to ask questions. The more interaction we have, the better. I'm super easygoing, laid-back guy, and I will answer questions along the way. This is not scripted. We're going to just talk about order flow, really laid back, have some fun here. Let's see, next slide here. So TradeStation, love it, right? Everybody uses candlesticks. I would say somewhere in the neighborhood of 98% of all traders are using candlesticks. Now, so for some of you new traders, that's the only format that you're going to have ever seen. But in the old days, we had line charts and we had different styles of charts. Now we all use candlesticks. So this is our reference point. So the downside is on the a candlestick. All we see is we see the high, we see the body, which is the main range. There's a difference between the open and the close, and we see the low. Okay, and that's pretty much all we see. We don't see volume. We don't see, we just see the price action that is within an individual candle. And we know what direction, whether price was moving up or price was moving down by the color. And that's the scope of what we have there. So TradeStation came out and said, hey, with easy language, you can design and build your own indicators and tools, and you can add more information to it. Well, we've added more information to it, and we've actually modified a candle to look a little bit different. So we're going to move into the next slide here. We move into sequencing. And sequencing is using data that comes from the matrix. Okay, so for you TradeStation guys, the matrix has got all the information that we're using. If you're not a TradeStation person, you're here for some other reason, we call that level 2 data. But the level 2 data is really matrix. So in the TradeStation world, it's data from the matrix. That being said, this is what it looks like in TradeStation. So try to take a look at this and see what, this is going to be the scope, the main scope of our entire discussion today. And what I want to show you first and foremost is that this is a candlestick. So here's the wick, and you can see here's the whoops, can't draw. Here's the body, there's the wick, there's a little tail here at the bottom, and it's red. Okay, so what we've done is we've taken the same information that was in the candlestick, but we have literally exploded the candlestick to be able to see what's going on inside it. And that is really, really important because this is what's going to help level the playing field. I know we use that term a lot, level the playing field. And we want to be able to see what is really going on. And let's just face it, the candlestick that looks like this, okay, doesn't tell us enough information. We know what price is doing, but we don't know anything else. So what we want to look at is, and guys, I'll put that demo link up towards the end, okay? So don't worry about it. Nothing to worry about. What we're going to do is we're going to literally take what you're normally looking at, a plain candlestick, and we're going to just blow it up. We're going to extrapolate. We're going to blow it up and see what's going on. So when I show this to people who have never seen, this is called a footprint chart. Okay, so this is a footprint. It's also a candle. So the same candlestick patterns that you're used to using. Is everybody okay sound-wise? I see Rob's having some problems with sound. Everybody okay with sound? Okay, yeah, all right. All right, Rob, it seems like it's on your end, okay? Maybe Don or Jim or Nicholas can assist you in figuring out what's going on there. But So anyhow, what we're doing is we're going to blow this thing up so we have a lot more information. Now, when I show this to novice people, they look at the numbers in here and they go, holy smokes, there's numbers everywhere. There is no way that I can make sense of this. Well, yes, and in the beginning, it is going to be like, seriously, all these numbers? But we're going to actually really spend some time with figuring out what the numbers are saying. So first of all, let's just take this. Let's look at this candle right here. Okay, so notice there's two sets of numbers. Okay, so all the numbers on the right-hand side. So if we can, all the numbers on the right-hand side, those numbers are executed contracts that happened on the ask. Okay, so this is from time and sales. Okay, so this information is available in time and sales. Time and sales is going to show you whether it was on the bid or ask. If we've looked at a time and sales window, you would see that it was scrolling red and green. Well, the red means it was executed on the bid, which is the left-hand side. So if it was executed on the bid, it's going to be on this side. If it's executed on the offer, it's going to be on the right-hand side. So that's where those numbers are coming from. And these are actually completed trades. This is not in the matrix where you're looking at the order book. Okay, so the order book's shifting around, the bid and the ask, all those numbers are shifting around. It's not those numbers. This is actual time and sales completed contracts. Now, let me say that there's a reason for that first and foremost. The reason why we're looking at executed trades is because everybody's probably heard this term, spoofing. A lot of times on the offer or on the bid, you'll see a big order come up. And it may be true, maybe a real order. It probably is a real order, but it gets canceled very quickly. And maybe you see large size at different levels on the matrix. Well, those, I read somewhere that 87% of all orders, are canceled. So only 13% of all orders are actually executed. So that 87 that gets canceled, what is that? Well, it might be Troy, the 1,000 share, the 1,000 lot, 1,000 contract trader who missed a trade, and so he cancels the order and goes to the next level up. Okay, so then there's, that order gets canceled. Or there's Troy, the 1,000 contract trader that says, oh, I don't want to do that, and I cancel the trade real quick, right? And it could also be me on the offer after I've got my 1,000 contracts, letting it go at a higher price. But then I changed my mind because price starts moving up very quickly. I'm like, hey, dude, got 1,000 contracts. I can make more if I go up a little bit. So all that jockeying around on the matrix in the order book or the price ladder, lots of different names for it, that information is so dynamic and it's hard to tell what's going on. So we don't care about that data. We're interested in the actual executed information. And the big deal there is that the numbers that are in here, this is where your mouth this is where your mouth meets the road, or how are you going to say that? Your money where your mouth is, I guess is a better way to say it. This is executed trades. So this is what really moves market, is executed trades, not that order flow or the matrix order book information. This is actual executed trades. So what does this tell me? Okay, so big deal. I can see how many contracts were executed on the bid. Okay, so right there at the bottom, there's 19 contracts executed on the bid. There's none on the offer at that price. The next level up, there's 343 right there. I know it's hard. 343 contracts were executed on the offer side. Now, let's think about that. How does a trade get executed on the offer side? Okay, so who is executing a trade on the offer side? Okay, very, very cool here. This is the crux of it, okay? So if you're executing a trade and you're executing on the offer, that means you took the offer, you hit the offer. All right, if you do that, you are the aggressor. So anybody who sets a limit order on the offer is a passive seller. And who do they need to take that trade? The other side, they need an aggressive buyer. If they're not an aggressive buyer, they're going to be sitting on the bid, waiting for someone to hit the bid. Okay, so what we can really do with this chart is say that this is no longer price action or just numbers. This is aggression. And that is a key way of thinking about trading. This is aggression. Aggression. Because whoever hits the ask is being the aggressive buyer. Okay, so the aggressive buy side, so the right-hand side is aggressive buyers, and the other side is aggressive sellers, because who hits the bid? Somebody who wants to get out now. I need to sell now. I don't play around waiting for my order to get hit on the offer. I hit the bid. I am the aggressor. So we can separate this into aggressive buyers and aggressive sellers, and we can see the quantities. And of course, these candles are filling in real time. And that's a huge description. We can see exactly what's happening. Now, yes, hard to read, lots of numbers. So what do? We start doing color coding. I'm going to color code some things. Now, let's take a look. Let's take a look right here on this one right here. Let me erase my start over again here. So you can see we've got some colors right here at the top. There's some colors right down here at the bottom. There's another one right there. Another one up here. Now these are really, really important. What we see, so remember, the right-hand side's aggressive buyers. Now, you can't see the numbers here. Let's see if I don't have an expanded version of this. But the numbers, let's look at one where we can actually hear. Let's look at the bottom of this one. Okay, so here's the numbers, 592. Next one here is 476, 327, 106, and 7. So if I can look in those numbers right there. Now, what's happening with those numbers? 692, 478, 327, 106, 7. The numbers are going down. All right, so what does that mean? Well, it's on the aggressive sell side, right? This is being executed on the bid. Being executed on the bid, and I'm seeing that the sellers are slowing down. We call this a sequential decline, and it gets highlighted in either green or on the top side in red, or that dark crimson color. This is saying that, hey, pay attention. At the tops of the candles, we've got, or the bottoms, we've either got the sellers or we have the buyers that are slowing down. Okay, now every single one of you should be going, now wait a minute, Troy, what do you mean you can see the sellers slowing down? All right, so now here, this is an up bar. So I'm not interested in the sellers. I'm interested in the buyers up here at the top. And what's happening is price is going up because this is highlighted. You can't actually see the numbers inside it, but it's going down. So there's less buyers at each consecutive price as we go up here at the top. This is screaming at me that the buyers are starting to get tired. They're starting to get tired. When I can start seeing the ebb and flow, I want to see, what do I want to see at a turning point? Yeah, it's exactly known as a fade. Exactly. This is going to make your fading way, way better, because you're going to be able to not only guesstimate that you should fade it at this level, you're going to be able to see the order flow, and the order flow will actually confirm that you want to fade this spot. Okay? That's what this is all about. It's being able to see the buyers slowing down. Now, at the top, we want to see buyers slowing down, and we want to see sellers coming in. We want to see a response. Now over here, this is in reverse. Not happening over here, but on this bar right here, again, let me kill this. Start here at the bottom now. So we have 977, 856, 565, and 325. Sellers, remember that's the bid side. This is the bid. This is the offer. This is aggressive sellers, and this is aggressive buyers. So we see that the sellers are slowing down dramatically. They're slowing down here at the bottom. What do I have right here on the next bar? I have a blue number. And it's on the aggressive buy side. Remember, this is the aggressive buyers, aggressive sellers. So you have sellers slowing down and you have buyers coming in. Now, how do I know they're coming in? Well, it was in blue. You'll see there's a blue number there. Here's some blue numbers occasionally. Sometimes you have them in stacks. There's a stack right there. Okay, there's a bunch of blue ones on this one. Blue numbers is called a buy imbalance. We're comparing the aggression that happens on the bid versus the aggression that happens on the offer. And when we compare those and there's a significant difference, it's going to highlight. This is saying, dude, hey, there's a lot of buying going on here compared to the selling. Let me say that again. There's a lot of buying going on compared to the selling. Now remember, okay, now first off, I know a bunch of you guys are going, now, hey, Troy, come on now. There's always one buyer for every seller. True. I'm not interested in that fact. I'm interested in the aggression. Is there more aggressive buying or aggressive selling? I'm interested in aggression. And that aggression can be highlighted. We look at 3 to 1. So if there's 3 to 1 more aggressive buying than aggressive seller, it's going to highlight in blue. So I've got a big bar down. Now, how many of you on a big bar down are going to go long? Very, very few are going to actually go long because you expect to see follow through, right? Well, we don't trade that way. We're looking at this information saying, hey, what's going on inside this candle? Well, here at the bottom, we've got sellers that are really backing off. And then the bar opens and we get blue. I'm going long right in here. This, I can't say that if you are just looking at a regular candlestick, there is very few people that have the kahunas to go after this and say, yeah, I'm going to buy it here. Because how many of times have we seen a big bar like that turn around and be another big bar down, right? You can see the aggression. You can see the tide turning. So we see the sellers here dramatically slowing down. We also see this highlight right there in gray. See, there's a highlight right there in gray. Every bar has a gray area on it. We call that the COT. It's really the highest volume price within the bar. So this is the high volume price within this entire bar. That's another way of telling that there is going to be a shift gears because there's so much volume going on down here. Sellers and buyers are fighting, duking it out. This is showing that there's high volume at the bottom of the candle. Great reason to go long. This particular chart, let me see. Good question. There's a question about the time frame. This is a 5-minute, right there. This is a 5-minute. On the ES, I use a 5-minute or a 7-minute, okay, to trade from. That's my main trading chart. Now, in addition to the order flow is not everything. Let's be honest, order flow is not everything. There's going to be other things that are going to contribute to this decision to buy here, not just the order flow. The order flow is sort of what we're looking at. Yeah, COT is an acronym. It's for it's an old reference to commitment of trader. Okay, so some of you old commodity guys will remember, and they still do this. They put out a commitment of traders report. and it tells where everything is. I just thought it was kind of catchy, so I like using the COT. It's basically the high volume price within a candle. Commitment of trader is what COT stands for. Once you have these, again, it shows you where the action was inside the candle. And for a reversal bar, we want to see the action at the bottom. We want to see buyers and sellers engaging at the bottom. Obviously, less sellers and more buyers, and that's evidenced on your next bar here by that blue 158. So you're going to always look for the sequence of events, and the events are this. Lots of selling, 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 and then the sellers it gets too cheap, right? I mean, let's put this in real terms. What happens when you go to a garage sale? I'm actually an ex-contractor, so I have every contracting tool in the world. And I have I had 10 different kinds of hammers: a framing hammer, a ball peen hammer, a sledgehammer, framing hammer, a finish nailer, all kinds of different hammers. I put all these hammers out because obviously I'm not construction anymore, and I have 10 different hammers. So I'm like selling them at a huge discount, $10 a hammer. And of course what happens is what, your neighbor comes by and says, yeah, I'll give you $1. And you're like, you know what, for $1, it's going to stay in my garage. It's too cheap. So at some point, price gets so cheap that you're not interested in selling it. And that's what you're seeing at the bottom here. Its sellers are not as, it's already come down a lot. I'm worried that, right? All those things are going through the seller's mind, and sellers stop selling. And about the time sellers stop selling, the buyers are going, hey, guys, look at this. It's at a discount. This thing is at a discount. Just 5 minutes before, we were up here, what, 30 ticks back up here? Now, they oversold it. It's oversold. We're at a bargain. And then, bingo, what happens? The buyers come in, and we start seeing this movement. This goes literally like this. So sellers, sellers, less sellers, less sellers, no sellers, buyers coming in, buyers coming in, buyers coming in, and boom, we see a change in direction. Okay? Now, as NOFT, our primary method of trading is contra trend. Okay, so a lot of people go, dude, why don't you go with the trend like everybody else? Well, lots of other people have done market research, and they tell you that the trend is only in place approximately 20% of the time. The other 80% of the time, the market is directionless. Well, do I want to be playing when the market's moving 20% of the time, or do I want to play when the market is 80% going sideways, when I can make money on reversals? Have a trade here and a trade here, comes down, goes up, goes down. I want to be the guy taking these reversals all day long, not the guy going, oh, this is a long, and I'm holding. Dang it, I'm only up a few, holding, right? And I told you, I gave you a disclaimer that I was going to destroy the chart here. I did. I'll erase all of that. But if you could see me, I'm actually talking with my hands. In this case, I'm talking with my mouse. But you're going to find that when you can actually see on a current bar what's going on, where you see aggressive buyers are doing, the aggressive sellers are doing, you suddenly have a new way of confirming a trade. Okay? Now, let's add to this a little bit more fun. And how many of you guys are Fibonacci traders, or at least know about Fibonacci? Yeah, a lot. All right, so let's just we're gonna play. We're gonna say that this is a Fibonacci from some other high point to another low point, and say this is, or maybe there's a low point that's way down. We've got a Fibonacci drawn, and this is a 61.8. The golden ratio, man. Everybody loves the 61.8. Now it's coming down to the 61.8 and say, so this is a 50, this will be a 37. You get the idea, right? Now, how many of you have parked an order at the 61.8 fib and then got run over? And the answer is everybody's gotten run over at a fib level. Fibs are great. They work a lot of the time, but not all the time. What order flow does for you will do for you. It'll take whatever your existing method, whether you're a fib trader or you're a supply and demand, a support and resistance, a pivot point trader, it's going to give you the ability to filter your trades like you've never been able to filter before. Now when it comes down to the 61.8, I go into this candle right here and I say, what's going on down here at the 61.8? Oh, the sellers are slowing down. Oh, well, sellers slowing down. Buyers coming in. Do I want to take this retracement? Damn right. Yeah. Now, if the opposite is happening and it's coming down to your 61.8 and all I see is strong selling, not declining selling, I'm not going to take that trade. Because it's probably going to be the next bar after this is probably going to be that big one that continues to go down, right? So this is the last piece. We obviously sell a system. We teach how to read all this, but this is sort of the last piece of the filter or this decision tree before you take the trade, whatever that is. And it can be any existing system. It's going to be enhance any existing system because you're going to be able to see what's actually happening. Yes, there are some times that we only have the ones that are highlighted are only the ones that are 3-to-1 or greater. So there are differences, yes. But we're only interested in when it's extreme, so 3-to-1 or greater, to find these imbalances. Now, you'll see some numbers above up here. Okay, so this is 5 by 3. What does that mean? It means there's 5 red numbers. 5 red numbers versus 3 blue. So let's see, there's 1 there, 2, 3. There's 3 blue. So this is called an imbalance summary. So I can just glance at this and go, okay, look, the aggressive sellers, the imbalances here is 5 to 3. That tells me exactly what I need to know about this bar. Okay, I can see that in the aggression, this is hyper-aggression when it's highlighted. 5 by 3. Now, when it's greater than 5, we call this an exhaustion bar, and it'll be highlighted. It's not on this chart, but it'll be highlighted. An exhaustion bar is saying, hey, there is so much selling, and it's imbalanced. It's unbalanced. So much selling going on that it's unlikely that this is going to continue. So looking up here at that imbalance summary, I can tell just by glancing at it, without even looking at the meat of it, I can see, hey, we are getting very close to where the sellers are becoming exhausted. A bottoming effect is imminent. Okay, is imminent. And that's what that summary is for. So that's something you can tell. Also, you'll see the green number at the top here. That's a 765. There's 2031, 816. That's called the delta. That's the net. This is the net of all aggressive sellers versus aggressive buyers. Again, this gives us a snapshot of the entire candle. It tells us how much more aggression was actually happening on that bar. So the 1,858 on balance, there was 1,858 aggressive selling was going on this bar. And look at the numbers before it, 700, 500, the one after it, 3,000. All right, so we went from negative 1,800 to positive 3,000. That's a huge movement. And that is the U shape. That is exactly what you want to see. The U-shaped bottom you're looking for. net sellers versus net buyers. Now, aggression, net selling aggression, net buying aggression. So tons of information that is available on what we call this footprint. Let me see. Harry says, why is a 344 by 434 highlighted in red? Let's see, what candle is that on? Highlighted in red. I'm not seeing it. Oh, right here. Right there. That's what he's talking about. Why is that red? Okay, so a bid ask. You're always going to be one tick apart, right? Okay. So we're comparing that 344. Let me close that. That 344 is being compared to the 0 right there. So these are always compared diagonally, bid versus offer. So it's looking at, so this 405 right there is comparing it to the 128 diagonally, one price point what the spread is apart. So what's happening on the bid, what's happening on the offer at any given time, that information is going to be one tick apart. Okay, so that's how we're calculating that. It's comparing the bid to the offer and vice versa, the offer to the bid, always diagonally. Yes, I would agree, Bob. I should have made a blow up of just one candle. You're absolutely right. My apologies. Do we use hourly charts? You can use hourly charts, but you're going to lose some of the value of this information because on an hourly chart, you're going to have a much bigger candle. The bigger the candle is, the harder it is to determine what's going on inside of that candle. We want smaller candles. On balance, I don't use anything bigger than a 15-minute. It just becomes too much information and it's really not useful. You really want to see what's going on a smaller time scale. Remember, these ebbs and flows are happening every day, all the time, and we're interested in those minor waves, those swing highs, those swing lows that are happening intraday. And that's your primary use for this, is definitely a real-time, fairly active trading system. For those guys who are going to do 3 to 10 trades a day, we do have scalpers that use a 3-minute chart. But 3 minutes, the smaller you go, the smaller the candles get. So if this was on a 2-minute or a 1-minute candle, the candles would be so small they wouldn't have enough information in them to be useful. So you want them to be at least 12 price levels to be diagnostic. Okay, so. Okay, let me see. Can I do screen sharing? The time and sales information that comes across, it's there. Okay, so you're just plucking that information and you're building it into the candle here. I am certainly not a programmer by any stretch, but you can define that field. And that field can then, you can use that into a tool, and et cetera, et cetera. I don't want to go into programming. I would say primarily for day trading, yes, JT. But that being said, even a swing trader is going to be able to use this because you're going to get a better entry. So you say, hey, it's coming down to my price. I'm getting ready to swing this for a week. Well, it's coming down. You dial down to this 5-minute bar and say, hey, do I want to take it here, or do I want to see if I could get a better fill, if it's going to go down farther? Okay, so here's whatever my price level is. You can still get a much better fill by dialing down. Now, granted, I get it. On a swing trade, do I care about 10 ticks? No. I mean, I don't care if I'm early by 10 ticks. I don't care. Because on a swing trade, I'm going for 40, 50, 100 ticks, right? Over multiple days. So your entry is not nearly as important However, 10 ticks is 10 ticks. If I can get a better entry, I can use this to help me with a better entry. Now, I don't have anything live at this time, Joel. Good questions. All right, so let's actually go to the next slide because I want to show you. You can compress this down. You guys can't see very well, but you can compress this down to where you are. This is the way how I read it. This is what I'm looking at whenever I'm trading. There's all kinds of additional information that we haven't been able to highlight because of time constraints. We have a thing called traps, which is a retail trap. A retail trap is whenever a large number, you'll see at the top of this candle right there is a 622 contracts right there at the very top. It's not on this chart, but this will be highlighted. And what happens there is people see this high and they see that it's going up and they're afraid they're going to miss it. And so your retail traders, a lot of your retail traders will jump on and do a breakout trade. And they have a very large number at the very top. If you notice, there's a 16, there's a 13, 7, 18. Usually it's a fairly small number, 11, fairly small number that's at the top of the candle. Here it's 622. I mean, I don't know that you're going to even go multiples, 22, what's that, 36, 4, 7, 20, 14, 92. That 622 is just jumping out at me going, dude, you've got to be able to take a look at this. That's an anomaly. This software is going to identify very specific anomalies that are clues that you're at a top or you're at a bottom or that you're going to be in an area that's going to continue. So a continuation of the trend. Very, very cool. So that being said, I can take questions. I think I've been trying to keep up with the questions as we go along. We have this product, good question, Letson. We have this product for futures as well as for Forex. It will work on some ETFs, but it's really not adapted. We haven't really adapted it to stock trading or to ETFs, primarily futures, secondary to Forex. We will eventually move it over to a stock and ETFs. There's technical difficulties with stocks and ETFs. Mainly that stocks will gap, and when you gap, you get zeros. When you have zeros in here, you'll sometimes still see zeros in futures and in Forex, but not nearly as much in stocks. It really makes the chart look ugly. So right now, just futures and Forex. This purple is what we call an open auction or an unfinished auction. See, each candle is being an auction. And what you want to see is you'll see there's a 0 by 11 here at the top. And what happens is that means that we have gone up. We have exploited all the buyers. There's no buyers left to go long. That's what that 0 is for right there. And at the bottom, you'll see there's a 0 at the bottom. So see, there's a 3 by 0. We have exploited all the sellers. So the auction is complete. The auction is over. What each candle is trying to do is it's trying to totally exploit all the buyers or all the sellers at those extremes. And when these extremes, like that right there, right here, tells you that there is still buyers there or there's still sellers there, and these become magnets. These become price magnets in the future. Sometimes the magnet gets this unfinished auction gets filled very, very quickly on the next bar, but other times it gets extended out. These work really, really well during lunchtime when it's really, really choppy. And you would fade these. So the price is going to go back up to here to take out the rest of those buyers or the rest of those sellers on the downside. That's a whole nother piece. Like I say, this is the entire purpose of this webinar, is to whet your appetite, to open your eyes to what order flow can do to your existing system. We don't ask you to say, throw out, I mean, I love these webinars where they say, well, everything you learned before is junk. You learned it wrong. You've got to learn our new method. We don't do that. I don't care whether you're a fib trader, a pivot point trader, you know, you are a lunar galaxy guy, and when the planets line up, you go long. Whatever your method is, with order flow, you can actually say, yeah, I do want to take a trade here. And that little bit of extra confirmation, what does it do for you? Well, it cuts the number of losers you have down, because you're not blindly taking trades. You're taking trades where the order flow is starting to match your idea of what you think is going to happen. Okay? It's not blindly just doing a candlestick. You're actually saying, hey, does the order flow confirm my premise? Is my premise is to go long? Are buyers coming in? If my premise is to go short, are the sellers getting aggressive? Are the buyers getting tired? With this, you can answer that question, and that will enhance your system, because you'll cut out losers, and the number of winners that you have will be hopefully more, but at least the losers will be less. So it makes everybody's system better, because you'll avoid, you know, some of your losing trades. And as we know, when you avoid losing trades, it's the same thing as making more money, right? Now, when I was a hedge funds trader, I went to the head trader one time, called me in his office, which was really bad, because usually that meant you were going to get yelled at. I went into his office, and he had, and I hate to say this because a lot of this will tell you how old I am, but this is back in the days when we had green bar paper. It's called green bar. It was these long sheets of paper, and they were perforated. So it was, one sheet would be, you could have 30 sheets of paper, but it was all perforated, connected. He shows me this big pack of green bar, and he picks it up for effect, and he lets go, and it drops, you know, 15 pages of paper all in this string fall down, and he says, Troy, you lose money in the first 20 minutes of trading every single day. I'm like, really? Are you serious? He's like, yeah, every single day. He says, so stop trading the first 20 minutes. So I quit trading the first 30 minutes. Those kind of patterns, and what does that do for me? That cut my first two trades. My first two trades of the day were not losers. Let me tell you, that made a huge impact on my weekly total numbers, my monthly total numbers. I'm talking about not a few thousand. I'm talking about thousands of dollars over the course of a year by just cutting 2 or 3 trades the first 20 minutes in the market. Says Troy has a new rule. You can't trade in the first 20 minutes. So for whatever reason I was losing in the first 20 minutes, I stopped that. Well, it's the same concept here. If you can cut a losing trade, just one losing trade a day, you save $25. You save $125 a day. You multiply that by 200 trading days a year, now you're talking about some real jack. You can identify, Lonnie, you can identify orders greater than, you can set, we have, it's called a block trade. It will identify specific block trades of a certain size. It'll highlight, it'll actually segment a section, and it'll tell you, hey, there was, in this section, there was a block trade. I set it for the S&P. I only look at 350. So I know when there's a big boy is coming in, that 350 minimum number of block trade, it's going to highlight, and we can highlight. I don't even have it turned on this slide. Incredibly, all of the information that's in here, all of the information can be identified and highlighted. So you can say, I want to know where the biggest blocks are. I want to see the biggest blocks in consecutive bars. We have a thing that's called the ghost eye block, which you can define. I want to see the highest volume area or the highest block number within 3 candles. And it'll tell you exactly where that is, which is another way of tracking institutions, seeing where those big boys are playing. We haven't even talked about that. Okay, so there's a ton of additional tools that we didn't have time to talk about today. And I'll just keep going with the questions. What does a zero mean? A zero means that there's no contracts executed at that price. Okay, so that's what the zero means. Can you tell if it was on an uptick or a downtick? Well, yes, Lonnie, because if anytime that's exactly what this is. If it's on a downtick, it's going to be on the bid side. It means they hit the bid. Okay. If it's an uptick, they're going to be hitting it on the offer. All right. So in a way, this does tell you whether it's an uptick or a downtick. It doesn't tell you whether the current bid or ask is in an uptick or downtick, but that is where that information comes from. What does a candle look like when the institutions are holding the market tight? Well, you get stuff like this right here. It's real narrow, and you see these summaries here: 1 by 2, 1 by 0, 1 by 1, 1 by 0. When you see a 1 by 0 and a 1 by 2, a 1 by 0, 1 by 1, what does that tell us? It means that the aggressive buyers versus aggressive sellers from an imbalance perspective are not one directional. 1 by 0, meaningless. 1 by 1, meaningless. What's going on? We're going sideways. So there's all kinds of little things that are going to add, what I call it, all these little things that we're talking about fill in the gap. They fill in the gap of knowledge of what's going on concurrently. And they are sort of the pieces to the puzzle, the pieces of the pie, however you want to think about it. And when you have those, then you can make an educated decision so much better when you're ready to make a trade. I know so much better. It's probably not the right way to say that, but you understand what I'm saying. It's not a feature within TradeStation, guys. This is third-party software designed to run on top of the TradeStation platform. Absolutely, Harry says, can you combine this with volume profile? Absolutely. I don't have a slide of that, but we can actually put the volume profile on the side here. You'll probably, the way you've never seen it before, you'll see it'll be like something like this, showing you each price level and the volume. And it is on this side. We have a volume composite that's on the side, which gives long-term volume profiles as well as real-time volume at price. Depends on the package that you get, but it's in the neighborhood of 5,000 and all the way down to maybe 2,500 is the price range. It will work. Okay, so Letson. Okay, so we did talk about it working on futures and Forex. It will work on the SPDR, the SPY ETF, and it works on a lot of the ETFs because the ETFs, there's enough volume at each price point that it will work. It's whenever, for instance, if you're trying to trade Google, there might be $5 between the last trade. You know, it's a $700, $1,000 stock, whatever. You're going to have gaps, and the way this is built, the way these are built, it doesn't handle those gaps well, and so you end up with a really funky looking footprint. So, but the high volume, the triple Qs or the quad Qs, the SPDR, the DIA, those all of those are will work with this. Yes. Okay, so let me, I'm looking at the clock here. I'm running out of time. Let's go to here. Okay, so here is the good stuff. All right, so book a demo, guys. Go to this site and set up a demo. Don't take my word for it. Go see it live. Talk to the guy who's doing these demos is a real trader, okay? All of our sales guys are traders, have been traders, are currently traders. That's actually a requirement to be in sales. You have to have been a trader before in some form or fashion, so you can talk the talk. All right, we don't want you getting sold something. We want you to be able to see it in progress. All of our products come with a guarantee return. It's either a 14-day or a 30-day return policy, no questions asked. It depends on the package you buy. And all packages come with some form of education, whether it's a video tutorial or it's actual live classes. Yes, we have a customer service. We have some tech guys who will assist you in called a gold glove installation package. Every package comes with that. Someone will dial into your PC while you're there watching and help you set it up. That's all I've got, guys. Sign up for, write this down. Sign up is pretty simple. www.noft-traders.com/book-demo/. It'll take you to a scheduling site where you can schedule or put in an email address and somebody will reach out to you and give you some options. Like I said, I recommend that you pick a time when there's live market hours so you can actually see that current bar filling in. You can see that and see how that information is going to massively change the way you see the market. Okay, very, very, very cool. No, you cannot rent this. It's not a lease, but good question. It's not in the App Store. No, this is, again, a third party to TradeStation. Yeah, do your own research. Don't take my word for it. Go and research order flow and check out order flow and what a footprint candle is. There's lots of information out there. I am a big fan of kick the tire, self-educate before you take the plunge. And the upside is that we do have a money-back guarantee. So you have time to get it installed, play around with it. If it's not for you, give it back. Pretty simple. It ranges, Gary, depending on the package that you get, anywhere from about $2,500 to a top end of about, well, the top end can go really high if you do some sort of personal mentorship, but we do offer personal mentorships. We have a live class that happens twice a week. If you subscribe to those, it can raise your costs, obviously. It's a cafeteria system. You can pick and choose what you want, but bottom line is somewhere around $2,500. Top line is $5,000-ish. Okay, Gary? And the key to this that's really important that you guys should take away from this is that you don't have to change what you're doing. I'm not asking you to learn a new system. I'm not asking you to throw out all your years of experience. I'm saying let's pyramid what you've learned, your method. Let's make your method better. Take your method. I have guys that they spend 2 weeks with us and they're like, oh my God, I went from being 3 out of 5 trades, now I'm doing 4 and 5 out of 5 trades because I'm not taking those losers. I'm not using a different system. My system is still awesome. I just don't have that guesswork that happens. Am I going to take that fib number? Is that fib number going to be a retracement level, right? So that's really where we're coming from. And again, I would suggest you do this during live market hours. Our guy that does these is really good. His name is Sam. He's awesome. And that's all I got. Don, you want to take it away?
Yeah.